Vincent, for a $4 billion stock, it's certainly providing lots of entertainment. I'm talking about Elan, and they were speculated to be in the market for acquisitions. Now it seems to be turning back on them. What's going on?
Well, basically what has happened is that a specialty pharmaceutical investment vehicle called Royalty Pharma has come kind of out of the blue with having made an approach to Elan to say we'd like to buy you. And they're maybe offering $11 a share. That puts a value of about 6.6 billion on Elan. It catches Elan at a moment of weakness because they've just sold their main asset. They've yet to receive the cash, and they're kind of developing this acquisition strategy that the CEO wants to pursue when he gets the cash from the sale of the asset. At the moment it doesn't have it, so it's kind of vulnerable, and I think Royalty Pharma is just taking advantage of that. This is very opportunistic.
And the Elan CEO says, trust me, I know what to do with this money. We're talking about Tysabri, the multiple sclerosis drug, which they still get revenue stream from. Yeah. What else is the company after apart from the cash?
Well, I mean, he hasn't actually specified, Kelly Martin, the CEO of Elan, hasn't really specified quite what he's looking for, but one assumes that it would be in the biotech space. The trouble with that space is that the biotech companies are very expensive. They're all takeover targets, and they're all very expensive. There's a sort of built-in takeover premium in all of their share prices. And I think that what this does is it gives kind of two competing strategies. One is stick with Elan for sort of long-term returns from an acquisition, or take the money up front now from royalty. That's the choice I think that investors are now facing.
And quite a lot of money it is. I mean, even though the Elan share price is depressed and it's come down a long way, it's a fairly chunky multiple that's being offered here.
Absolutely, yeah. It's about 16 times the sort of the enterprise value to EBITDA multiple is about 16 times, which is very, very chunky indeed. That's twice the sector average. So, that's the kind of takeout premium that you probably need to pay to acquire these biotech companies. It's what Elan itself would have to pay, presumably, if it was buying one of its smaller rivals like Jazz or whoever it had decided that it had its eye on. But that's the kind of premium that probably Elan will have to pay to make its own acquisitions. Right now it is the subject of a possible offer from royalty.
And final quick question, where do you think the shareholders of Elan are sitting? Are they lost their patience? Do you think they'd be attracted by this?
I think they may be, because Elan doesn't have an acquisition record. It hasn't really bought anything for a decade or so, and waiting for a CEO to spend a lot of money is a very risky strategy.
Well, we always like contested bids here on Lex. Let's see how this one plays out. Thank you very much.